Hello Market Club members everywhere. Adam Hewison here coming to you from the digital studios of Market Club. We're going to be looking at things a little bit differently today. We're going to be looking at seeing if the trade trials can predict earnings and market direction for when a company announces its earnings. First one we're looking at is Facebook, symbol FB, and that actually made a new high today, announced earnings, and it was very compelling with its mobile units and so forth, but we're plus 100, so we came into this market long, and we're up about 5% so far today. So that one worked out very well. You can see we were saying if you have a green weekly and a monthly, then you want to be long the stock. So that's worked out extremely well for us. So having said that, let's move on to some other markets that didn't work out quite so well, but they saved you money anyway. Next stock is Celgene. CELG is the symbol. You can see we have a conflict between the monthly and the weekly, indicating you should be on the sidelines. And it's a good job too, because this market's down over 5%. So you would have avoided this loss in this particular stock had you been long going into the report. Qualcomm, symbol QCOM, big losers today. Now, having said that, we were on the sidelines with this particular market because we had a monthly red trade triangle and a weekly green trade triangle. That changed, of course, with today's action because it's gone dramatically lower and everything is now red, indicating a lower price, a new recent low. So the trend is definitely down. So you would have avoided, certainly we said the sidelines position, but you wouldn't have caught the move down. So we're just suggesting today at 57.02 to get short this market. You'll be short from 56.73. Next stock is Marathon Oil, symbol MRO. We were indicating mixed trade triangles, indicating you should be out of the market, and that's a good job because the market dropped dramatically. Not dramatically, but certainly it's down a couple of percent, 3.3%, and there's no reason to jump into it. But you avoided this because of the trade triangles. Again, when you have a conflicting pattern, a red monthly indicating the longer term trend's down, and a green weekly indicating the trend is up, the intermediate term trend is up. It's saying be on the sidelines on this one. Be safe. This is CenturyLink. Now CenturyLink, this is very interesting because we had a situation with CenturyLink. We said we had a red monthly and a green weekly. Now you'll be out of the market, but we just came in with a green monthly today at 29.03 to be a buyer, and of course that's a positive for the stock. So that has turned around. You wouldn't have caught this move up, but you wouldn't have missed it either because today's was the signal to get long at 29.03, currently trading at 29, so you can actually buy it a little bit lower than the original buy point. This stock is Bojangles, B-O-J-A is the symbol, and you can see it popped up very quickly here. And we also had a red monthly, which we still have, and a green weekly, indicating you should be a sidelines. And of course you would have avoided this pop. It didn't change. Interesting enough, it didn't change anything in the stock, even with this big move up today. This is Lannett. The symbol is LCI, and you can see a big drop today, but that was coming into the day. We were long. The red monthly was there, indicating the longer term trend was down, and a green weekly. Now that's changed today at 39.61, and you can see we are currently trading right at these levels right now. 39.61 is currently trading at 38.07, so it's actually dropped a lot. So the trend is now officially down for the stock, whereas it wasn't before. Now that's currently stocks that's market, some of the major stocks that announced today. We're going to be looking at some stocks that are going to announce after the close today. So let's go to those stocks right now. First is Walt Disney. Now Walt Disney is indicating a monthly down and a green weekly, indicating a sidelines position. You should not be long this stock right now. It's a trading 55, minus 55, a trading range. So it's saying that earnings from Disney is either going to be flat or disappointing. So that's what we have to look for this afternoon. This is News Corp, NWSA. Again, same pattern, red monthly, green weekly, indicating a sidelines position. Again, the earnings should be a little bit disappointing, flat to a little bit disappointing. Be surprised if it's a big earnings, but we would look for this market to be on the sidelines or possibly even, well, just be on the sidelines. That's the key thing right now. This is Monster Beverage, the symbol MNST, and it's minus 75. Again, the same pattern, monthly down, green up. You should be on the sidelines in this position, but it doesn't look like they're going to have good earnings either. So let's see what happens with those three stocks after the close today. But again, this is a way to look at stocks using our trade triangles for earnings to predict earnings. And as you can see, based on the Facebook, it did very, very well, and it did keep you out of some ones that could have hurt you had you been in a long position. Hey, I'm Adam Hewson. I hope you liked this quick lesson on using the trade trials to predict earnings. I'll be back soon, so thank you for watching. Have a great trading day, everyone, and let's see how those markets close and how the earnings come out later on this afternoon.